is got 3 bays, and we chose to make it into a maker space, a maker's den. And so one of the things that we did is we set up one compartment to have all of our tools and our 3D printer, and you can throw pottery and make art in this section and do handcraft and brass work and that kind of thing. One of my friends, Jared Marquette, decided to decorate this door with every one of his Legos ever, which leads to the bathroom, which is kind of funny. And then we have a little recovery room. And so this is where I come to jump in the far infrared sauna and set up my ice bath. And so I'm hoping you'll join me sometime. Clothing required in the ice bath, sir.
That could have gone either way.
So all of this is part of Archipelago. And Archipelago is a community that I'm involved with and I've helped to create. And it's a social community where we can kind of explore who the hell we are. So there you go, Tony. That's probably enough about a garage, but where it's meaningful for real estate is this was a way that we creatively looked at a piece of real estate that we have. The front half of this is on Tennyson, and it's a retail location that is always filled and does great. The back half of this is this garage that made us a couple $100 a month. Instead, we turned it into this maker's den, and in doing that, we now capture $1,000 a month in rent. And the total investment for us to do that was maybe $20,000, $30,000. You look at the return on investment on that, and we paid back that investment in about a year and a half, 2 years. And so one of the things that sometimes we bring to the Atlas table, we do this with our property management, we do this with our portfolio evaluations, is understanding what can a piece of real estate really become if we think a little bit more creatively about it and we understand how to value add it, but not just in the traditional ways of trying to increase rents, but also, hey, this might have really beneficial zoning. How do we take advantage of that? Maybe we have a side-by-side duplex. Let's figure out how we can separate the party wall, do a party wall agreement between that shared wall and sell those as 2 individual units when it comes time to sell those, because the 2 individuals might be worth more than selling it as a duplex collectively to a new buyer. So just always trying to think about a real estate creatively. This one is one of the more creative ones because we made it into a makerspace, but I like to come here and hang out and work on the business a little bit. Today, I'll be working on how we can become a better company for our clients, for our employees, for our vendors, for all of our stakeholders. And usually that means going into the office, or certainly being in my house isn't the best venue for me to work. So I decided to come to the Maker's Den, and I got the space to myself right now, which is nice.
Awesome. So if someone's interested in Archipelago, Ryan, they want to learn more about that, how do they do that?
Probably the best place to start is archipelagoclubs.com, and I'll put into the chat what the website is. And then through that, you can request info and get to me, and I'd be happy to tell you about it or put you in touch with the right person.
Fantastic. Well, everybody, thanks for joining us today. We are back to a monthly. We're going to move our webinars to monthly going forward. And because we like this context. We've had a lot of fun connecting with our clients and our friends in the real estate world, and this is a great way for us to do that. So we want to continue this, and just watch for these invites. They should be monthly going forward, and hopefully we'll continue to add value. And so our goal here is to spend about 30 minutes on some content. Ryan's going to give some commentary on a number of different topics, and then we'll just open up for questions. And the best way to ask a question is there's a button at the bottom of your screen in Zoom that says Q&A. And you can just type your question in there, and we'll get to as many questions as we can in the second half of our call. So with that, I'm going to hand it over to Ryan. And Ryan, tell us what's on your mind.
Great. Well, Ryan Boykin, founder of Atlas Real Estate. I always like to start these calls by reminding everybody of who and what Atlas is. So Atlas covers 4 distinct areas of business. The first one is that we're a property management company. We manage approaching, I think, around 3,500 units of residential property management in Fort Collins, Denver, Colorado Springs, and Phoenix. We're a brokerage. We help people to buy investment real estate, particularly single family, duplex, fourplexes, as well as people to help buy and sell their homes. And we usually take the perspective of how do we make sure that any purchase that you're making really adds to your investment life and your investment portfolio. So that's the focus of our brokerage. The third thing is that we have a really nice partnership with Zillow and Zillow Offers, helping them to purchase the homes that they purchase and sell on a monthly basis. And I'm actually going to talk about that a little bit further today. And then the fourth item is we help big institutional clients, multi-billion-dollar investment funds, to purchase their portfolios of single-family real estate for rent. And we primarily do that in Colorado, Arizona, and Nevada. So that's just who Atlas is. I think it's nice to recap that a little bit, and it is a little bit of a mouthful, but it's a good place to start. The second thing that I want to recap a little bit is the Atlas investment thesis. People in our company hear me beating this like a drum every day. There's three things that we look at when we're looking to acquire a piece of real estate, and I think it's increasingly important to look at all three today, given the environment that we're in with coronavirus, even with the race relation difficulties that we've had, certainly in terms of fiscal stimulus, monetary stimulus. This really still plays in quite a bit. So the first one is that we only acquire real estate for our clients and for ourselves. We own a lot of real estate ourselves. This is a big deal because as owners of real estate, we think we can be better stewards and better advisors to you and your ownership of real estate because of what we've done and what we've learned of our own ownership. So the first one is we only buy and advise clients to buy real estate in markets that we believe have a great 20-year trajectory ahead of them. That means that we think that they will appreciate over a 20-year period. Now, we don't know if the line is going to look like this or if it's going to look like this, but we have a high level of certainty that we're in an appreciating, strong, basic economy like Denver, like Phoenix, and so on, that will grow in value over a 20-year period. If it doesn't have that, it's out of the picture. That's why I'm not a big investor in some places around the country that I think are less certain about their appreciation. And I could pick on a few markets, but I won't do that right now. The second thing that we believe in our investment thesis is that we must have cash flow. And we're about to get tested on cash flow because when we have bad economic times, if you have cash flow, you can weather the bad economic times. You still have rents, you can still pay your bills, and it keeps you in the game to see that 20-year picture evolve and come into play. Now, the third thing is that we want to know the markets that we invest in so well that you can tell me any address in any part of the metro area, and I'll know exactly where it is, and I'll know exactly what's going on with it. So that in the submarket of Colorado Springs, not just Colorado Springs as a whole, but the Academy, North Academy area, the downtown area, you name it, along the Broadmoor area, I'll know exactly what's going on in that area to be able to give some sort of educated guess as to, oh, there might be a nice appreciation story or path of development story, some extra juice in this picture that's going to get me more than 3 or 4% annual appreciation like the rest of the country, more than just my cash flow, something even better. We don't know if that thing is going to come together, but we try to buy assets that are in the path of development so that it comes together over time. So never a bad thing to recap our investment thesis and who we are. Wanted to start there. Now let's get into a little bit more of the block and tackle. First thing is that I want to update everybody as to what's going on with collections, what's going on with leasing across our portfolio. It's been astonishing over this period. Our collections have been fantastic. As of this date in July, we are tracking 1% behind our historic average of collection rates. And that historic average is prior to March when COVID-19 and this era began. So only a 1% decline in our collection rate is astonishingly good. I love to say that it's only because of our great property managers and our great property management philosophy at Atlas. I think that the reality is that many folks out there are seeing higher than expected collection rates. And the reason for that probably is the economic stimulus, the unemployment package that's been put forth by the government. And I think it's important that we recognize that right now we don't have a second layer of that that's approved. Our government is discussing that. I believe something will come together. However, I also believe that unemployment in particular is what we'll need to look at as it relates to collections. And it's my belief that in the next round of unemployment benefits that are approved in the next package, and I believe there will be another package approved, that it will come in at a lower rate of benefit to that unemployed person. So maybe it's a 70% of their historic wages earned, as opposed to their full wages, and in many cases more than their full wages, because of the way the current unemployment package is structured. So I believe that we need to still be very wary as to what collections look like in the coming months, particularly as we come into the winter months. I'm already thinking about December. The reason why I'm thinking about December is because we're at the end of July. School's going to start in the next month. Generally speaking, in real estate, when school begins, people begin to take their eye off the ball on their real estate transactional life, whether that's renting a property or buying a property or selling a property. And then before you know it, you're in October, and October is the beginning of the holiday season and the cold season. What I think is important to realize is we could have a little bit of a double effect here. December is always the hardest month for anybody to collect rents on. Why? It's the holiday month. People want to spend money on gifts and these kinds of things. We could also be in a place in 4 or 5 months coming in December when our stimulus package and what's propped up our economy isn't as strong. And so I'm keeping a keen eye on what it might look like in the winter months in terms of rent collections, in terms of leasing velocity, and in terms of transactional volume for the real estate. So I'm a little cautious. I wouldn't say I'm cautiously optimistic. I just say cautious. I'm thrilled with how this has performed for our portfolio that we manage and the transactions we do, but I'm just keeping a keen eye on it. So that's our collections update. Leasing update. Our leasing activity is fantastic. I think that the activity is a little bit stronger on 1 and 2 bedroom type product as opposed to the 3 and 4 bedroom type product that we manage. Most of all, probably on 1 bedroom. And actually, it doesn't surprise me, because if you're a prospective tenant and you're thinking about your next year and the uncertainty associated with our economy right now, you might be saying, gosh, I could live in a 2 bedroom, but the 1 bedroom is just cheaper. And I'm just going to go for what's cheaper for this next year because I want to have that certainty that I'm going to be safe. And so generally speaking, in tougher economic times, we see people move down the value chain. They move from a grade A luxury apartment to the grade B, or they have a 4-bedroom house and it used to be 1 family in there. They might combine households, or they might go from a 4-bedroom to a 3 or a 2-bedroom to save those dollars. But generally speaking, our leasing has been raging hot, and I'm very, very pleased about it. So, a couple other updates. The real estate transactional market is raging hot, particularly for assets that are valued less than about $700,000 in Denver, and a little bit lower tier when you get into Fort Collins, Colorado Springs, and Phoenix. But that first and second time home buyer category is very, very hot. Not going to speak too much more about this because the news and the media has covered it well, and I'm sure most people have already seen it in the news and media. What's going on in Atlas? Well, I'm very pleased to report that we are actually hiring people right now. So we've recently hired a couple of new property managers because our property management division has grown, and we're looking for additional future candidates that might be candidates in the next 1 to 6 months. 2 other pretty exciting areas that you or some of your other people might know of folks that are looking for opportunities. If you are, email one of us, email Cassie, email info@realatlas.com. The first one is we'd like to go out and buy some property management companies. Over the history of our company, we have about 3,500 units that we manage or thereabouts. We've only purchased 2 or 3 companies to get to that number. Almost all of that 3,500 units has been organic growth. But we've probably purchased 300 or 400 units from other property management companies, and we acquired that company. We've always had a lot of success in doing that. And what occurred to me in our purchases of other property management companies is, yes, you're taking risk that the clients are going to stay or leave, but resoundingly, we got the feedback, wow, Atlas's property management services are actually stronger than what I came from. When you purchased me as a client, that was a win for me as a client. Oh, that was a good piece of data for us that maybe we should be doing that a little bit more because we're helping those clients. We're also helping the owner of that company to sell out of their asset. And so we're looking to buy more property management companies, and we're going to hire somebody internally to Atlas Real Estate who will be a director of acquisitions for the acquisition of our property management company departments. So if you know of anybody that wants to develop great long-term relationships with other owners of property management companies, or that has that skill set, please let us know. The second hiring category that we're really excited by is we want to hire more investment specialists in our brokerage department. These are the folks that help you as an owner, a client of Atlas, to buy another investment property or begin your journey down the investment pathway, or to provide that portfolio evaluation to understand that, hey, this property that you've owned for 10 years has appreciated wildly. Maybe it's time to sell out of it and buy into something else that has a new appreciation and a new cash flow story. So we'd love to get some more investment specialists in our brokerage department. So I'm going to pause there. Tony, I don't know if we have any Q&A. I've got 15 other things to go over. Just want to make sure that I'm still on track and that I'm not going rogue on you.
This is great. I will just remind everyone, go ahead and throw your questions in the Q&A now. And as Ryan opines on some of these topics, they may lead to questions for you. So just go ahead and drop them in the Q&A, and we'll keep them compiled, and we'll move to those here in a few minutes. So Ryan, if you want to continue, I'd say maybe another 10 minutes, and then we can switch to questions.
Great. And Tony, I've had a couple people email me questions as well, so I have a couple here, but I love the idea of continuing on. A couple other housekeeping items. As it relates to financing, we've said this before on this venue. I'm going to reiterate it here. Any bank debt that you have, now is a moment to review that bank debt. Understand how long the amortization is. Understand if there's a balloon on that amortization. Understand what the term is, how much of every payment that you make is principal and interest, and what the interest rate is, okay? Take a look at all those variables. This is a very favorable time to do financing. My own personal primary, I financed at a 2.5% interest rate on a 15-year mortgage a couple weeks ago. I didn't expect to do that ever, frankly, but it made sense. I went from a 4% to 2.5%. So on your primary residence, that's a good place to begin looking. On a lot of our investment portfolio, both residential and commercial assets, I'm locking in new 10-year fixed and 15-year fully fixed, fully amortized loans at about 3.75% interest. I think it'll be somewhere between 3.5 and 3 7/8. And for me, I'm taking very low interest rate risk. I'm locking in that interest rate for a very long period, or it's a fully fixed loan. And I think that interest rates are incredibly low. I think in 3 or 4 or 5 years, they'll probably be quite a bit higher. So I might as well review my entire portfolio. Something I've done. I know a lot of other people in Atlas have done it. Just a reminder to the participants that take a look at that. And if you're not sure where to go with it, please reach out to one of us and we can do a portfolio evaluation for you. Our portfolio evaluation tool is something wherein our property management team and our brokerage team come together to analyze how we're performing. You know, are we getting the maximum amount of rents? Is there a property that we're property managing that might have a difficulty as it relates to the asset itself that we should get ahead of? For example, it's got water that is negatively draining into the house, which will lead to foundational concerns or water intrusion concerns. It might be a big ticket item. It's not something that we're usually tasked out at addressing from a property management perspective. But in that portfolio evaluation, we might come across that. We might say, geez, this is a $10,000 item. Let's do some cash planning to understand how we can tackle that issue. Looking at your loans and your interest rates, that's part of the portfolio evaluation. And then also looking at, hey, some of the houses that you may own in this property portfolio are duplexes or fourplexes or 10-unit, 50-unit apartment buildings. What's the story for them going forward? We know what the story was and how we got here going backwards, but sometimes we forget to look at, geez, every submarket is changing every year. Is the story getting better or worse? And how does that inform whether or not we want to purchase or sell a property? So if there's interest in that, we can do a portfolio evaluation for you. So one of the topics that I wanted to address was Zillow. I'm going to do this in a little bit of a roundabout way. the first thing that I want to comment on is the status of our society with COVID and social distancing. It occurred to me a week or two ago when I was chatting with Tony about our company. We're in real estate, and when you look at what happened with COVID, and you look at what happened with the shelter in place, it occurred to me that maybe at times I'm not being a big enough leader in my life, in my community, in my family, in our company, and our constituents to really be a leader as it relates to the standards of social distancing. And the reason why this is important is, one, it's one of our core philosophies within our company to value human life. Good for you, good for me, good for everything. And that's a big deal. I want to be a leader in that category. And then I looked at it economically and I said, geez, if we were to go back to a shelter in place order because of COVID, how would that impact my business? Well, it turns out real estate is like one of the most impacted businesses or categories as it relates to shelter in place. And as indicated by that, when the first shelter in place happened in early March, our two biggest clients decided to stop doing business with us for an indefinite future. And as a result of that, unfortunately, it was a very difficult time that we waded through, I think, very gracefully. We lost over half of our revenue in a snap of a finger. We had to make very difficult decisions about some of our labor force, and we had to reduce our labor force and do some furloughs and layoffs. Fortunately, our property management side of the business became stronger, and our brokerage side of the business also became stronger. That was unanticipated. But, you know, the impact associated with the people that work for our company is so great that I think that it behooves us, it's upon us to be leaders in this notion of, yep, we're going to take social distancing seriously. We're going to take wearing masks seriously. And if we're not doing it, then we're not really taking into consideration the people we've already made promises to, like our clients that are on this phone call right now, like our employees, wherein their job is put into jeopardy, like our vendors, some of which we're the only client that they have. And so I think we're taking a real serious response to that. Case in point, and that's how I get to Zillow, is Zillow Offers. So some of you may not know how Zillow Offers works. Zillow stood up a new form of their business called Zillow Offers about a year ago. When I search on Zillow for my home and I want to figure out what my Zestimate is, as I scroll through the options, underneath my Zestimate, there's a button that says, why not just sell your home to Zillow? We'll buy it at fair market value. And essentially what happens here is that seller clicks that button. And when they click that button, there's a process through which Atlas and Zillow for Colorado work together to determine a fair market value, negotiate a contract. Eventually, Zillow purchases that home. And once they purchase that home, they do some construction, some fix up to it, and they bring it back to market within 30 days, 60 days, 90 days to then resell that home. And we help them with the purchase. We help them with the sell. We help them in a partnership to make this whole beautiful wheel run. Well, when COVID happened, they said, hey, we're going to hold off on doing this for a little while. So that was a big deal. And it was painful for our company. What they came to realize, and what's really fun, is Zillow Offers understands they have such an incredible value that they bring to the marketplace right now, because they promise to a seller a cash offer that is certain, that is safe, that can be closed on in 5 days or 90 days, up to the seller, and they're going to negotiate it and be done. Certainty and take the risk off the table. What an amazing tool at a moment, because of COVID, that we have complete uncertainty as to what the market will bear and what it will bring. And as a seller, I've got one shot at getting it right for my giant investment of my home. And Zillow can take a lot of that risk off of my shoulders and help to provide a great solution. So that's the Zillow Offers program. And 30 days ago, they came back into the market in Denver and said, yeah, we're going to start doing this again. What a great moment for Atlas and for Zillow and for the community of Denver and Colorado as a whole that they're back at this, and a good indication of what a shelter in place can do to certain business lines and to stop them, and why it's important that we continue to be leaders on the COVID social distancing protocols that our governor and our other municipal and local leaders have set up. I have one more comment on Zillow, and I'm going to pause again for questions and answers. We've learned so much from this company. They're such forward thinkers. They always ask ourselves where we're strong as a company, where we're weak as a company. How are we forward looking as to how real estate is changing for homeowners, for investors, for renters, all the categories. Really pleased to say that they've really taken a hard stance on some of this race relation stuff going on. And their stated and coined term on this is racism has no home here. Man, I was so proud to be aligned with a company with a stance like that when I read that. And they sent it out to every one of their partners and a lot of their constituents and said, this is where we sit on this. And I'm happy to say that I think that we're aligned on that as well. Even happier to say that there are other clients and groups and people like who are on this call that get to be leaders in our lives that we get to learn from, not just from a business perspective, but just from a personal perspective. Because frankly, for me, business and personal, it's the same thing. Every day I wake up, I just want to be Ryan Boykin, and I just want to get a little better every day. And so having folks like this in my life that can push it forward is very meaningful. And I hope that those moments permeate fully through our company, employees, vendors, stakeholders, clients, investors, the whole nine. So I'll pause there, Tony. It's 10:27. I'm prone to taking every minute of available time. I've had a couple of questions come in. I can address them. I don't know if you have any. Where do we sit?
Yeah, if you want to address the email questions first, I think that's great. And another reminder to go ahead and throw your questions in the Q&A.
Okay, great. So one of the questions that I received was in relation to, in a moment of crisis, in a moment of economic difficulty, as an entrepreneur, we need to be more creative than ever. And so the question was, can I speak to innovative approaches to business and maybe more specifically to real estate, creative ways in which we're keeping our employees inspired, in which we are looking at new partnerships or reviving old ones, and how we're becoming stronger through COVID. So how are we innovating, and how are we reviewing what our business is in order to innovate? So this is a really great question. I wish I had an hour for this one. For our business, and I'll start there, the first thing that we say in a moment like this is, does our business still exist? You know, we've had such a fundamental shift based on what's happening in our economy in this pandemic, that starting with the business model I had yesterday prior to March, is it still even viable today? And in answering that question, I had to really think about it, because 50% of our revenue disappeared through this pandemic. And I was worried about the other 50%. And I own a lot of commercial real estate, and a lot of it's restaurant space and cafe space and fitness space. And had to really answer that question. I'm really happy to say that as it relates to Atlas, our business still exists, and we are already stronger than we were before. I'm amazed at how financially secure we are. I give so much credit to our CFO, Andy Quat, to Tony, to our business line leaders that are out there, because we are financially stable, we have great revenue, and we're able to then say, because we have that, and because we have savings, now given the new environment, where are we going to lean into new innovation? One of the small innovations that we did is we developed a resident resource manager. We talked about Erica Ojeda Olivier in this phone call, many cases, because she was out there talking with our tenants and making sure, hey, are we okay? Are we okay? What can we do for you? Here's a resource. You got to go here. That was a small innovation for us. I think that the innovation that Zillow has recently created around Zillow Offers and the certainty associated with selling your home to a Zillow Offers is more palatable and more available than ever before. One of our other businesses that we're working on is called Reactive. And I don't want to go deep on Reactive, but essentially it's an innovation into commercial real estate to enable leases to happen on an online platform so that commercial real estate isn't so manual with so much legalese and difficulty, but instead could be leased up on an online platform on a short-term basis for 1 day to 6 months, 12 months, anything less than a year, because commercial real estate is about to have a very, very difficult time with vacancy. So how do we start to help with that issue? I think there's a lot of other innovations that we've seen come together, like the virtual tours being used more, the Rently lock boxes that we do, which enable people to see the home themselves through social distancing. We can get a background check on that person. We can have their credit card on file, and then we can send out via telemetrics a distinct code to that renter in front of the house to enable them to enter the house without us, but we have a background check, we have their credit card on file, we have a credit check. Then they have 15 minutes or 30 minutes to review that house on their own so that we can enable them to tour a home to rent and not violate social distancing protocol. That's a really nice innovation. Another nice innovation is virtual staging. It's one that we popped up and we had a lot of success with. This is very anecdotal. We had a home that had been sitting on the market for 240 days without going under contract. Unfortunately, the home looked bad and we couldn't show people through the home because of shelter in place. And we said, what are we going to do here? We can't go in there and fix the home. We can't stage it. We can't tell people, oh, imagine this, imagine that. And we're just trying to sell a home. That's it. So we found a company out there that does virtual staging. You upload the photos, and through Photoshop and unique AI algorithm and the integration of the virtual sofa, the virtual dining room table, the virtual office setup, we're able to create photos for us that were palatable, amazing photos. And then we put those up with a disclaimer, it's a virtual staging. We want to make that clear onto the listing. And as a result of that, the home went under contract in a week and we sold it. So I just love moments like this because we're asked to test what we thought was the way to do things. And here we are seeing it right now with Zoom. I wouldn't have the opportunity to have this exchange were it not for COVID. That's an innovation that we now have as a part of our day. My day has become probably 25% more effective because of the use of online Zoom calls and not having to commute as much and less traffic. So there's tons of examples of innovation there. I think the one that I really focus on most and that we're still trying to get better at is how do we innovate around culture for our company? We have a very robust culture. We have employees that I feel are very vibrant and excited to work for Atlas. But a big part of that is the context and the texture of, hey, one-on-one communication and the laughs and getting a quick break, doing something fun. How do we create that in the COVID era when we have to be a little bit more distant? Well, one of the things that we did is we went on to Reactive, the site, reactive.io, and we said, geez, we can book an outdoor patio from a restaurant that's not using it, and we can do a 10-person gathering there for our little departmental meeting. And each one of our department heads booked different ones, and our employees got to go out there and they got to sit outside, have a drink, have a coffee, and talk at a distance with their people. That was one of the few ways that we figured that out. So a lot more that I can say on that topic. 10:34. Tony, you want to put me on mute or what?
Is that possible? Ryan, a couple of questions have come in, and so I'm going to toss them your way. The first one is thoughts on a federal eviction moratorium extension being included in the COVID-19 stimulus package. You know, there is not alignment on that yet as far as the House and the Senate, but certainly there are some very loud voices that are calling for eviction moratoriums for up to a year being included with any stimulus going forward. What are your thoughts on that?
My first question for you, Tony, is do I have any control or any influence on whether or not that happens? This is just the way I begin my thought process. Do I have control or influence on whether or not that happens? Yes or no, Tony?
I don't believe you do.
No, I don't got a direct line to anybody, okay? I have no control or no influence. So when it's not a part of my circle of influence, then it falls into the circle of my concern. So I'm concerned with that, but I'm not going to lose sleep on it because they're going to make a decision. I'm already in the game. I'm already pot committed. I've already got a bunch of units. Whatever decision they make, I'm going to understand the new game. Okay, that's my circle of concern. I'm going to understand my new game. And as soon as I understand the new game, I'm going to do everything I can to ensure that our company and myself and every other person that touches it is working within those rules to give us the best possible outcome. So do I want to see that happen? Definitely not. I'm not going to lose sleep over it, though, because I can't control it. What I can control is how we respond to it. And if that's the case, we will be bolstering every ounce of resident resource manager, property management tactic, educating people as to what this means, that it's a short-term situation, the long-term still remains, that they need to be cognizant of what that looks like. Maybe we'll need to gear up and have a cash for keys program because we can't evict somebody and they're a bad tenant. We need to get them out. We need to get possession of the property again. We did cash for keys programs like it was going out of style in 2008, 2009, 2010 when we were buying properties because we needed security of our asset. We needed control of it so we could fix it up and put a new resident tenant in it. Because of that, we may say that our old application process should be thrown to the wind and torn up. Let's disrupt that. It no longer is relevant. Now, the most important thing to understand with an application process is not their credit score. It's not their prior landlord referral or not, because they're all going to be bad. It's how long have they maintained their job. If they've maintained their job for 5 years, they're probably going to still keep their job 5 years or longer. Okay, elevate that. Let's put that higher. Or maybe in the application process, understanding the interview process, what that looks like. So we'll respond to it as the answer. I hope it doesn't happen. But I have a lot of confidence that we will critically think through very difficult problems to come to the best solution available.
That's great. Ryan, a lot of talk about a pullback in real estate prices toward the end of this year or into next year. There was some research released recently, particularly on the Front Range and in Denver around a decline in prices that came from CoreLogic. What do you see happening there? What's your thought?
My first thought is that real estate is local. And if you just read the news, you're going to lose that context. Real estate is local. So I won't opine on it based on the country because it's not relevant to this conversation. I will say that in our local markets of Fort Collins, Denver, Colorado Springs, and Phoenix, the first thing that I will ask myself is there still a good supply and demand dynamic? And when it comes to supply and demand, you're asking yourself the number of homes available to be sold or available to be rented versus the number of people that want to purchase or rent those homes. It's also to say, what is the net in-migration pattern in these places? What is the wage pattern? What is the unemployment or employment pattern? I think there's a very good case that the demand will become lower across the entire country, particularly if we see unemployment benefits really change. Employment is a giant deal for real estate, and we have a ton of unemployment, and it's almost like a shadow unemployment right now. So I think that this could have an impact on real estate prices. I do think that the economies that we're invested in are more resilient than most of the other economies in the country. Not all of them, but most of them. And that's going to work in our benefit. And I do also think that the house that I buy today or the 20-unit apartment building that I buy today will be resilient over our 20-year period. And I will have made a good bet, but I better have some cash flow because I might do this.
Ryan, that leads to a question on just one of your absolute favorite topics. And I know you, any opportunity you have to talk politics, you definitely want to dive into. So how do the election results impact real estate? And is there anything that you see there that might be kind of off the radar or counterintuitive? For instance, do you anticipate, impact to 1031 rules, or is there anything you kind of have your eye on right
now? I don't usually go down the political chain in that regard. I'm glad that you put it out there. I actually have an interesting comment on this. There was a quote that Barack Obama said prior to the election results of Hillary Clinton versus Donald Trump in this last election. And, we didn't know which way I was going to go. Trump and Clinton represented very, very different polarities. But Obama said, one thing that we do know is that tomorrow morning, the sun will rise in the east and the sun will set in the west. And that's kind of the way I look at this. America is stronger than any one elected official, even the president. And America and the thing that we have created in this cultural environment is resilient. Okay, there might be blips on this, but people want to live in America around the world. Everything's relative. Everything's a comparison and a competition. America's still at the top of the list, folks. It's amazing. Go travel the world. Ask anybody. They want to go move to America. That is a description of where we'll sit politically. even if we get this guy versus that guy. That's my opinion. I think that's been vetted out over decades. Now, one thing that's kind of sneaky that I am paying a lot of attention to in terms of politics, and it's not going to show up on this political agenda or this election period, but I'm worried about it, is the homeless law with urban camping in Denver. So I don't know how much people are paying attention to this in real estate, but I think this has a big impact on real estate. Essentially, we voted on this a year or two ago that there was going to be a ban on urban camping for people to be able to just pitch a tent anywhere. And then it was found that that was unconstitutional according to the Colorado Constitution. And this is where I go politically. I'm very locally oriented because I can have a real voice and a real circle of influence on local politics, actually. And it impacts my life dramatically, some of the things that happen in Denver and Phoenix and what have you. So right now we have a difficult situation. If you go downtown, a lot of places right now, there are homeless encampments that are giant. And I have a bleeding heart for the homeless people. And I've studied Seattle and San Francisco. And what happens is you have 0.1% of the populace that actually end up sculpting the experience for the other 99% of the folks, in my opinion. And the impact on it to real estate is real. And so that I think is less of my opinion. So let's just lean on that because I don't want to just opine on my own opinion. I want to look at the impact of things and we can draw our own conclusions. That is something that is difficult for real estate, and it will suppress real estate values, real estate rents. If you're an office tenant downtown Denver and you have to walk through human fecal matter to get to your front door, or a syringe, or an encampment of plywood where somebody is building a house on the sidewalk, it's probably going to influence whether or not you're going to continue to own that building or lease that building or want to live in the units above it, because it's a real hindrance on the lifestyle that you thought you were buying into. So that's sort of a political item that I don't think we're talking much about right now. It falls pretty far down the list relative to coronavirus and race relations. And so I think it's appropriate that it's pretty far down there. But it's something that I just think about from political. And you asked for something a little bit different. So there's something different.
Thank you, Ryan. All right, a couple of things. We're going to switch gears a little bit. First of all, we've talked on this call in the past about portfolio evaluations and how Atlas is approaching that. Do you have an example of a portfolio evaluation that you've done since then and how that's turned out? Again, just a story.
Sure. We're doing these all the time, but I always like to pick on myself because it shows that I'm in the same bucket as everybody else. I own a single family house in Edgewater. We discovered this through our portfolio evaluations team in evaluating about five of my properties. It's over in Edgewater off of 20th and Fenton. So those of you that know where Edgewater is, that's close to the Edgewater marketplace that recently stood up, which is a very vibrant, very cool marketplace with all sorts of cool food vendors and retailers. And so that area has really come together over the 7 years that I've owned the property. Well, the property's worth, by my estimation, it was $575,000 for a single family asset. And I was making about $2,400 a month in rent on it. So if you take $2,400 a month in rent versus a purchase price of $575, as if I were going to buy it again today, every investment that we own, ask yourself, would I buy that deal again today? Would I sell that deal today? Or would I just hold it because I'm comfortable with it? Well, I said $2,500 in rent against a $575,000 value. That's not a good return on investment. And I've already had a giant pop on this because I guessed correctly on the path of development for Edgewater. And then the Edgewater marketplace comes in and Joyride Brewery pops up and US Thai is right there and a little strip along 25th. I'm like, oh, it's right next to Sloan's Lake. This area is cool now. And it's not a secret that it's cool. Everybody knows it's cool. So because it's not a secret, it means I already got my bigger pop on that path of development appreciation. And I'm probably not going to get that same pop for the next 10 years because everybody knows about it. I'm probably going to go back to 3 or 4% appreciation. And my cash flow kind of stinks when I look at a value of 575. Put it on the market. Somebody's going to come in and scrape it. It's a double lot. They'll split the lots and put up 2 single family homes. That's why it's worth 575. It was a land play for me. The house that's on it as its own isn't worth 575. But if you look at it as 2 lots that are separated, that's really appealing to a developer. I'm not a developer. I don't want to take that risk. That's too much risk for me to be a developer. but I'm going to sell it to the developer. I didn't get 575. I got the equivalent of 565. And I say equivalent because we did some negotiation with brokerage commissions that they offered up for it to be a 565 equivalent value. And I'm selling that. My proceeds on that will be quite a bit. I don't owe very much on it. And I'll 1031 that into something new. In 1031 exchanging that into something new, I don't pay taxes on it today. But the new thing that I buy, I'll probably take my proceeds from the 565 and put leverage on it. Let's say I put 65% leverage on it. Now I'm buying something worth $1.5 million. And that $1.5 million purchase will probably give me $10, $12, maybe $13,000 a month in rent. So I went from $2,500 in rent, and with the same money, the same amount of investment, I didn't have to put any new dollars in. I'm now at $10,000 to $13,000 in rent. And ideally, I'm being sneaky about it, and I'm finding the next path of development, the next area that's going to be cool in 5 or 10 years, because I know this city so dang well. Or my investment specialist with Atlas knows Fort Collins so dang well. Where's the next Edgewater? So I think that's some of our secret sauce, but that's a portfolio evaluation in action. And I'm actively buying right now. And people say, hey, well, would you buy in this environment? Yes, I am. I'm putting deals under contract right now to purchase. And there's the case study of it right there, where I'm going to be in great shape for my next 20 years on the property I buy. And maybe I'm buying a little high, maybe I'm buying a little low because we don't know what's going on with coronavirus. But I just gave myself a $2,400 to $12,000. I gave myself a $10,000 monthly raise. Okay, I'm going to go ahead and do that.
That's a great example, Ryan. And if you are listening in today and interested in a portfolio evaluation, just feel free to reach out to us. You can email us. You can email me directly if you'd like, Tony@realatlas.com, and we'll connect you to one of our specialists that they wake up excited to do what Ryan just did with one of those properties. So we'd love to connect you with one of them. Ryan, that is the end of our questions today. So we are at the point where we can wrap up. Any closing thoughts today, Ryan?
Yeah, I have one really big one. People often remind me that with the way I deliver my words and my message, that it's with such conviction and such passion. And truly, it is passion. I really believe in what we do at Atlas. I really believe in the problem that we help to solve, helping people to retire through the ownership of real estate, helping people to save through the ownership of real estate, helping residents to have a better human experience through how we deliver our craft of property management to them. I'm incredibly passionate about it. And when I'm passionate about it, they say it comes over with so eviction that when I hear it, I think that it's the only possibility that could ever exist. I got no idea what I'm talking about, people, okay? Giant disclaimer, we're guessing, okay? We're making the best educated guess that we can, and sometimes it might feel like we've got the answers here. We don't have all the answers. This is a collaboration. This is an opportunity for us all as critical thinkers to say, hey, I see it like this, I see it like this, let's get better in this way. I feel like we're experts in this space, and because of being an expert, maybe our voice should be elevated a little bit, but it doesn't mean that we have all the answers. This is a very uncertain time. I'm a big believer in humanity. I'm a big believer in the progress of America. Sometimes in moments of pandemic and the Black Lives Matter and the race difficulties, you question whether or not we're on the progressive train. We are. I'm not being an optimist. I'm being a realist. We are. I believe that 100% fully. And there are difficult moments that are uncertain, and maybe it's going to be painful for a while, and I can't predict that. Nobody can. So let's be humble in our approach and vulnerable in our approach as we address this and other big decisions. So grateful for everybody on the phone call. If thank you is your only prayer, that shall suffice. So thank you, everybody, for joining, and really nice to be chatting with everybody.
Well, thanks, Ryan. Thank you again from all of us at Atlas for joining us today. And just a reminder, be safe, mask up, keep your physical distance, and let's keep Denver and Colorado and Arizona safe and moving forward. And we're excited to serve you any way we can. Feel free to reach out and watch for the next invite for the Atlas webinar. Thanks, everybody.